Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, July 14th. Let's take a look at futures. Oil and copper are down 0.75%. Gold is flat, trading right around 1814, and that's a level that I have as resistance. The next level above I have as 1822. So you may want to mark those on your chart if you're a gold trader. Large caps and small caps are largely flat. We do have technology NQ up 0.4. Looking over at macro today, we got a big day today. We've got a final PPI print at 8:30. We've got Jerome Powell on Capitol Hill. That starts at noon. And he's going to be, I believe he's talking to the House today. But that'll be very interesting on how he plays that. Everybody's kind of expecting, dove talk. But he's made gaffes before, so we got to be ready, and we got to be ready for a curveball because that could really affect rate. It could affect everything. So, especially if he gets really pressed on the hot CPI print yesterday of 5.4% that, kind of roiled markets. And he may get pressed on how come he's buying $40 billion a month of mortgage-backed securities when the housing market's been going nuts for a year. So it'll be interesting how he handles those questions. We've got the oil inventory at 10:30. We've got Beige Book at 2 p.m. On the earnings front this morning, before the bell, we've got Delta, Wells Fargo, Citi, BlackRock, PNC, and Bank of America. So loaded with financials this morning. And we had Goldman and JP Morgan yesterday. They beat their numbers. Goldman blew it out of the water. I think both of them traded down, though. So it's always about how they trade after earnings for me, rather than what the earnings were in particular. So let's dive into this. U.S. dollar had a huge move yesterday. You can see this candle here right up to resistance. I've got a downtrend line here. You're going to be watching really, really closely. If this were to break out above this 92.75 level, it's pretty much got an open runway up to 93, let's call it 93.40-ish. And they call it the dollar wrecking ball for a reason. It can wreak havoc. I mean, if you see a runaway dollar, that's going to really challenge emerging markets. You would probably see a lot of puts bought on EEM, other exporters, because that makes our products more expensive. But what I really want to show you, and why I put this slide up, is just to refresh you on the different scenarios and regimes we've been working under. We had a big bump in bond yields yesterday. We're going to get into that in a second. I'm going to go through it rather quickly. I did a longer discussion last night after the close, and I'll try to put a link to that in the show notes if you want to go back and look at a longer discussion of it. But bond yields and the dollar are driving a lot right now. And if you saw a spike in the dollar, that's going to put a lot of pressure on the commodity complex. That's going to put a lot of pressure on materials and all that kind of stuff. So even if you don't trade it, become familiar with this chart. I think it's really, really important. Yesterday, we had the hot CPI number, 5.4%, highest in, 13 years or whatever. We had a 30-year bond auction yesterday afternoon that roiled the markets, certainly roiled the bond market. And here we've got, we talked about it, we had the plunge in yields, and then we've had a snapback, back test of resistance. And that has accompanied a drop in TLT from the highs of just a couple days ago at around 150. So now we're back testing the 200 from above and this rising trend line. Now I've taken a long position in TLT on a technical basis. Why? Because rates are at resistance. I'm viewing it as a snapback rally that's going to be faded. And so I've taken a long position against this uptrend line on TLT. And I did see some bullish order flow yesterday in the options market. So I'm long against 144. If TLT drops below 144, I'll certainly be out of that trade. Looking ahead to the indexes, going to go rather quickly here. SPY, no changes. Stay long against this uptrend line, the 8 and 20 day. As long as price is above that, there's no need for immediate concern. If you want to worry about something, you can look at these bearish divergences. That is always cautionary and a yellow flag. It's not a reason to sell. We can still drive higher. So key off of the trend line. Sit up taller in your chair if you're long and you see a break of this trend. 2 hour had the rising wedge. We broke below. Got to get support down here if it were to fall. Down here at 434, 434 and a half. Look for a bounce there. If you don't get it, I would be, especially if you're trading short time frames, I would be concerned, because then that would open up the door to a larger move down to test this 133. And then if 133 failed, you'd be back down in this area here, probably fill this gap and then come down to the midpoint at 430. And if you are long, you certainly wouldn't want to sit around and watch that happen. This morning, early, I'm going to be watching yesterday's low. And if yesterday's low holds, I think you can be long against it as a pivot. And then a confirmation that that's right would be a break above this 436.50. And say if we go up in the pre-market and we open above 436.50, that's what you want to see hold. Of course, there's going to be, if that were the scenario that played out, there would be a gap below. They could come down and fill that, hold the line at yesterday's low, and then go higher. But that's all managing the opening trade. What I really want to see today is simply yesterday's low hold. If it doesn't, then that opens up that 434.50 and potentially lower levels. Qs, no change on the daily. We're above trend. We're above the 8-day. We're above the 20. Everything's pointed bullish. The one cautionary thing I would tell you to watch is PPO flattening. You want to see that reaccelerate higher. You don't want to see that flatten and roll over. You don't want to see RSI roll over and break trend. If you saw these things happen, then you would probably see price breaking down from this trend line. And if you had been riding this all the way up, that's when you got to get defensive. You got to get tactical. Doesn't mean you got to go gonzo short, but you don't want to, just sit there blissfully long saying, oh, they're going to buy the dip when you get this correction. Because remember, we got this breakout here, and the breakout has not been back tested, and that would bring you all the way back to 340. Happens all the time in technical trading. Breakout, back test, and if you got that, I'd be giving it everything you got right there at 340. Certainly at this trend line at 335 for all that to hold. So, but that's way down the road, and that to see that happen, you'd have to see, all the
mega cap names break down, Apple, Amazon, you know all the names. So just key off this trend line if you're long, and if price stays above, you're in good shape. 2-hour chart this morning, I want to see 362 hold. We broke out, we gave it up in the afternoon, and now we back tested it, and it held into the close. As I mentioned this morning, we were up 0.4. If that holds into the open at 9:30 and then holds from then on, then we got a chance to reattack these highs at around, what was the high? 365.45 here. So I would be using 362.50 as your pivot this morning on the Qs. And here we see it on a short 30-minute time frame. We're still within the channel. We're right here at the channel low. I want to see 363 and a half recaptured. And then I want to see a drive higher up towards the midpoint of the channel, up towards, let's just call it 367. Reattack these highs from yesterday, 365.5. If we break below, we're going to be open down to 361, and I would view that as kind of like gotta hold territory. Why? Because you've got a decent amount of trading action here right above 361, and that was a breakout area. If you lose 361, then I think you can pretty much count on 358. So from a tactical standpoint, that would be, a place where you could get short on a break of 361 and then look for a $3 move. But let's see. Let's take it hour by hour. Don't want to jump into too many scenarios, but that's a key level, 361, if price wobbles. IWM is not looking so hot. Why? We made a couple runs to break out of this $23 range. We got rejected. It has been rolling over for a couple of weeks, 3 weeks really, and now we've lost all the moving averages, the fast ones, the 8, the 20, and the 50, and now the door is open for a move to back test this prior low of last week down at 218. And then from there, if that doesn't hold, we've got the bottom of the box down here at 212.50. And just from a technical standpoint, that's how these consolidation ranges work. I mean, let's look at the prior action. Bottom of the range, top of the range, fail. Bottom of the range, fail. Top of the range, fail. Bottom of the range, held. Top of the range, fail. Came back down. This is the first time it didn't go, all the way back down. Made it halfway. Another try at the top, rejected. Now we're back down at the midpoint. So, unless price can recapture the 50, we could very well see the bottom of this trading range down at 212. So never underestimate where price could move. And here we see lower highs, high, lower high, lower high, low, lower low. This gap fills and 221 fails. You're going to come to 220 pretty quickly. And then I wouldn't be surprised if you came back down here at 218 and back tested this prior low. And then if 218 doesn't hold, you're back here at the bottom of the box at 212, right down here. And that's the level that we just talked about. So although SPY and QQQ remain bullish, IWM is definitely bearish. And if you see, that might be a compelling pairs trade for you. If QQQ is working, at least in recent memory, IWM is going down and vice versa. If QQQ works, IWM isn't. And if IWM is working, Qs will be soggy. And that's that scenario 1, scenario 2 that we had talked about, that sector rotation kind of thing. So if you see IWM getting bullish, sit up taller if you're long a bunch of tech stuff, because you probably see it wobble if you see IWM start taking off. But right now, it definitely looks bearish. And here it is on the 30-minute chart, just more detail. Here's the gap. Here's that prior low down at 218. And then if you get a break here, that would be a nice short actually. Get a break of 222 and then get short against that level and see if you can get a move down to 218. Running through Fatman really quick. I want to see 252 hold on Facebook and get a push higher above 354, and then look for a breakout above 356. If it can't hold 352 today, I would not be surprised if it came back to 348, and then I would really want to see that hold, because below 348, then you're back into 344, and big tech will probably be wobbling at that point. But with earnings on the 28th, I'm of the mindset that these are going to hold their bid or go higher. But you got to go level by level and not adopt some big thesis. Apple, earnings end of the month, like all of them. I want to see 146 recaptured. That would put this thing back on track for all-time highs, which was yesterday, right here at 147.50. If it can do that, it can get back on track. If you see price not able to take out 146 and starting to backslide, you could come back in here to this midpoint around 145 or even 144. And if that doesn't hold, bottom of the channel at 143. And just from an objective standpoint, if you were to get that $3 pullback, that's an objective long right here at 143. So mark that on your chart. If you see some downside action, you may get a really nice, compelling buy point at 143, because look, every time it's reached the bottom of the channel, it's worked. So let's see what happens today on Apple. Tesla, soggy day. You want to see 670 hold. I took a look in the pre-market here at 6 o'clock, and it was putting in a little bit of a rally here up into the 675, 680 area. So, but you want to see 670 hold to keep the door open to 690, then 710, then 720. There's a $15 gap. If you were to lose that level, then most likely you would get a back test of this 655. And if you were long short-term calls, you got to get out at that point, because you're looking at a $15 pullback. You probably don't want to sit through that. Microsoft 60-minute chart, nice uptrend, big impulsive move yesterday morning that took it up to the midpoint. They brought it back, which is common technical action. That's your half back long right here at the bottom of the channel. That's your objective level to buy it. If you missed all this, then look for a move back up towards the middle of the range. Remember, we've got earnings at the end of the month. I wouldn't be surprised if FOMO grabs this thing and ramps it, but gotta hold the inside of the channel. That's job one. And if you were to drop down below 280, good chance you'd come back to 277. But if you saw that pullback into 277, you've got a big level of support here. You can see that volume over price, and you've had a lot of price action here. That is your shot. That is your shot to go long if you had missed it in here for that move. So any kind of back test there at 277, I think should be bought, and then you can set a stop just below. Amazon, we talked about it yesterday. Big impulsive move, bull flag. You want to see 36.75, 36.70 hold today. That way, that'll keep this bull flag intact. If you get an up move today, get that bull cross here in momentum, get RSI breaking above 50, get that move back up to the top of the flag, and with any luck, you get a flag breakout ahead of earnings, and it can extend this bull flag. Bull flags fly at half staff, so by that axiom, this move is only half over. So don't give up on the trade if you want to get involved in Amazon. Good a time as any ahead of earnings and in this flag formation. But first things first, it's got to hold 36.70, got to hold 36.75 right in there. That is a very tight setup on Amazon. If you're not willing to give Amazon $5, then it's probably not the right stock for you. That's nothing. So really tight setup there on Amazon if you can get it. Netflix. We had said all along, $30 base, $35 gap. We're well on our way, right up towards the top. Today, use 542.50 as your pivot. You get a break above that, I would expect a gap fill up to 550. We got earnings next week. If FOMO gets involved and you get your position here at 542, I would be getting calls not for Friday, but for next week. Why? Because of that FOMO. Because if this thing gets running, you want to have those extra couple days, and then if you get that move, you can either roll up or just sit tight in your position and then pull the ripcord before the print, because you don't want to be involved during earnings. Anything could happen, and you don't have any edge there. So, but I really like Netflix, and we've basically had it the whole way. So, congratulations to the longs. Google, breakout from this consolidation, or this little, not a lot of consolidation, but hesitation. We broke out and held it yesterday. So anything above 25.45 is going to be bullish. Look for the leg higher. Anything below, say 25.40, I would be concerned. But as we've been showing for weeks, strong chart, nice rising channel on the daily. If you've been involved this whole way, just keep ratcheting up your stops and strikes. Stay long. Make sure you get paid for all this stuff, and see where this goes into earnings at the end of the month. Semis, I want to see 259, 259.50 hold today. I want to see a push towards 262. I'm long. I'm looking for a breakout here for the next leg higher. We've been beating this big consolidation range to death. I'm staying long against 258 no matter what, and looking for a $35 measured move. Now, before we get into a few trade ideas for you, if you're new to the channel and you like the analysis and you appreciate having very objective levels to set up your day, to give you clean trades as an active trader or daily time frame swing trader, hit the subscribe button and the alarm bell. You'll get my YouTube content. And then look over in the show notes and register for all my content with your email address. It takes about 15 seconds. And that way, everything I publish, whether it's a trade idea midday or market observation, you'll get it right in your email box, and you won't have to be hunting social media for that. So we'd be glad to have you. And longtime listeners, help me build the channel, help me build a community by passing the link along to your social media circles and other traders you may be involved with that would appreciate the analysis. Okay, housing, ITB, home builders, interest rate sensitive sector. Price rolled over out of this rising wedge, came down, took another leg down, bounced, and now we're back at the prior low. Look at the posture of the PPO. Remember what I always say. The center line is really important on PPO. Look, PPO reset, bull cross at the center line, that's bullish. Next leg higher. Here, dropped below, was not able to put in a bull cross, was not able to, pass zero, rolled over, leg down. Here, in the bearish regime, put in this rally, but now look at PPO, about to roll over just below the zero line. RSI, bearish, right here at support. Do yourself a favor, alarm 67, and if it holds, maybe there's a bounce. But if it doesn't, I'd be looking for 64 right here. If, for some reason, interest rates or whatever go crazy and puts a scare into the mortgage market, or Jay Powell this afternoon says, you know what? Yeah, you're right. We're gonna start tapering MBS, right? You're gonna see a gigantic red bar, I believe, in ITB. I don't expect him to say that, but the mortgage market is being supported right now, and when you take away the punch bowl, that may cause a problem. So alarm 67 for a potential downside break. AutoNation, used car dealers, prices go up every day, which I assume that means more profit for them. Been on a tear. Here we are at the highs. I would alarm 106. You get a breakout there, you can be long against the world, basically. All this, everything below all-time highs, you got to buy. You get a breakout here, I would buy it. But I would also be looking at when earnings are, and I have no idea when those might be. They might be late in the cycle, 2 months from now, or the end of next week. I have no idea. So put that into your factor before you make that trade, even if you do get the breakout. But I like the chart setup. Dollar Tree, opposite. Giant trading range from 98 up here to, let's just call it 115. Got a gap here. We got price below all the moving averages. Look, below the 8-day, below the 20, below the 50, below the 200. Everything is below. You got a line right here at, let's just call it 97.50. You got a lot of pressure on the supply chain. You got a lot of inflation pressure, and you got U.S. dollar pressure, which is going to make all their imported, I'll just say junk, don't take that personally, all the stuff that they sell become more expensive. That may squeeze margins, and that may be what we're seeing here. I hate to put any kind of big fundamental reason behind it because I'm not a fundamental guy. All I'm saying is this is a key spot. It either holds and goes back up to the top of the range, or it breaks and you come down for a first target right here at this bar. I haven't marked it in, but it'd be around 94. And once you get to 94, you got prior lows here that could be tested down around 85. So there could be some downside pain here, and it wouldn't take me much of an imagination to draw this as a bear flag. Here's the big leg down. Here's a flat bear flag. A break of the bear flag. Measured move. I can make that case in 5 seconds, right, from a technical basis. But the key is a break of 97 on the downside. So alarm that might be a real nice trade that you could sit in for a while. Looking at the other side of things, Shopify, big bull flag coming up here from 1175 up to 1550. Bull flags fly at half mast. You get a breakout here above 1550. God knows where this might go, up to 1800, something like that. Just eyeballing it. But you got a nice bull flag here that you can play, very much like the Amazon trade. So if you're interested in that, set yourself an alarm at 1550. Go ahead and set yourself an alarm at 1475. If you get a pullback into 1475, that would give you more or less a long against the 20 as this comes up. And that's not a bad place to be on something this strong. A back test of the 20 would give you a little margin of error. And then you can simply play for a first target to the top of the box at 1550. And then if you've been living right and luck is on your side and the market gods shine on you, then you get that breakout here and you're already in and not chasing it. So whenever you got a bull flag and you get a chance to hit it at the bottom of the flag, that gives you a very tight setup. And even if it just goes to the top of the flag, you already got a winner. So I like that setup. And then lastly, let's wrap up with Restoration Hardware. Flirting with all-time highs at 720. Again, check your earnings. If there's something not to like, you got a lot of bearish divergence here. You had high momentum and now you don't. But, all-time highs you got to buy. I wouldn't not buy this because of this momentum, because you get a breakout that starts running, then PPO is going to follow it. And remember, these indicators lag. Price leads, indicators lag. So it can give you a clue as to what might happen, but price tells you exactly what's happened. And if you get a breakout above 720, you can set your stop just below. And then, of course, you'll know immediately if you're wrong and you can get out. But once you take that trade, then you can hope for, either a run into earnings or the market take a leg higher. So let's wrap it up there. No matter what I do, it seems like this ends up being 30 minutes. So I hope you found the information beneficial. Let's see what Powell has to say at noon. Let's keep our fingers crossed he doesn't have a gaffe and, they pull the rug out. So, but be ready. Have a good day of trading. This has been Chris Bussett with Trader's Profit Compass. Talk to you next time.